Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. And today we're going to have a look at European energy markets starting the week 22nd of January 2024. Okay, before we jump into it, be reminded that intake is now open for the Clever Markets Technical Analysis Academy that will launch on the 4th of March. We'll have our 7-week academy running, and people have been pretty happy with the last intake. We did get a 5 out of 5 stars across all measurements. So if you want to bring yourself or your team up to speed, if you want to make your fundamental analytics more actionable, then do reach out to us. Okay, we are now looking at the TTF front month, and we simply had the downtrend continue as we had it last week. The stochastic is pushing into from oversold territory into neutral territory, which usually leads to some gains, but we haven't seen anything yet. And in line with the Clever Markets methodology, of course, we always need a tool confirmation and a move confirmation. But for now, there's nothing happening on the chart itself. But with or without a correction higher, we are still overall moving lower, maybe even into the 24. That is my big target. And if we have a correction higher, we should top out in the 35 or below 35 in order for the downtrend to continue. So with the midterm outlook bearish, that means we're looking for short selling opportunities on the daily chart, ideally in the peaks. And we did draw in the FIB retracement levels from this down leg. We are now retracing higher potentially. And the market has moved to the lower end of the channel once more. We bounced off it. We had these two, one spinning top, one doji, but thinking candles, let's call it that. But below the 23.6% FIB retracement, it is still all noise. So anything happening in this territory is noise, and the downtrend is more likely to continue. But if we move above 23.6%, then yes, we could potentially move, the correction could extend maybe to the 61.8% FIB near 32. And if we move above that level, then all the way up until here. But for now, I don't see it, possibly, if anything, here. On the way higher, the FIBs themselves should offer some resistance, so we have to evaluate the market as we move higher. Okay, so what do the tools say? We see that stochastic is giving a bullish signal, but overall nothing too scary yet because it is not really confirmed by tools. I want to see a break above 23.6%. We did see some bullish divergence on the MACD. That simply means the MACD is pushing higher while the price is still moving lower. So everything is like set up for a correction, but nothing has happened yet. So what does that mean for the intraday chart? Well, we probably see first moves here. We have changed from this old descending channel to this new ascending channel. And we also ended the week at the lower end. And here we see that the stochastic is giving us a bullish signal. And combined with this trough that has clearly formed here at an important support level, yes, I do believe that we can actually make it higher early this morning. But overall, I believe, judging from the momentum and trend tools, that ultimately the idea is still to move lower. And we can see that we already have posted our first lower highs, so the market isn't even willing anymore to move higher up to the upper end. So I believe a little bit of gains before it moves lower. And on the daily chart, this simply could mean maybe a little bit of a movement here, but ultimately possibly lower. That is it for the TTF front month.
European energy markets have changed for good. No longer can we rely on the usual summer-winter seasonality, and once-in-a-lifetime freak events seem to happen every other month now. So, what do we do? How do we stay profitable even in the most volatile markets? Hi, my name is Marcello Kolax and I am the Managing Director at Clever Markets, and also I am the host of the 7-week Clever Markets Technical Analysis Academy. We have opened intake now, and we will launch the 7-week course on the 4th of March. So do make sure that you sign up. Our graduates are able to spot trends early, plan trades effectively, and manage risk better. But what do our graduates say? Well, in 2023, we got a solid 5 out of 5 star rating across all categories, across all participants. We are also the only technical analysis firm that is about to be ISO 9001 certified, which is the global quality management standard. So you are in good hands. This course is suitable for beginner, intermediate, but also more advanced energy traders who already run their own fundamental models and look to make them more effective with technical analysis. Usually they can add trade triggers, directional confirmations, and targets. If this sounds like you, then get in touch. I'll set everything up for you. And if you're still not sure, then hey, let's meet up and you can talk to me directly and we'll together figure out if this academy is the right deal for you. Until then, see you around and bye-bye.
And now it's time for European carbon emission certificates. Okay. On the weekly chart, we see that the market is still moving lower. So we see that we had this mid-term channel going on for quite some time. And just 2 weeks ago, we broke below the already descending channel. So the mid-term downtrend was accelerated. So now I like to see this old trough as a potential resistance area, which is fairly close to the channel pullback resistance as well. So looking at the tools, it seems more likely that overall the mid-term downtrend will continue. And even if we get a little bit of a retracement, that is still fine because the idea still is for the market to move lower overall. Okay, but of course we don't trade on the weekly chart. For that, we would have to go to the daily chart to look for some opportunities. And of course, at the moment, we are looking for short selling opportunities. So at best, we would be looking for them once the trend resumes or once we peak out if there is some sort of move higher. So here we see that last Friday and Thursday, we had like two, I would call them almost like dojis / spinning tops. And we can see that the markets have moved sideways. So what some traders might do is they use the width of the first doji, which is 6246, 6413, as a kind of like a trigger area. So if we move above it, then potentially we could move a little bit higher before the downtrend continues, or even if we could move lower straight. So in both these cases, the idea is still for the market to move lower ultimately, which is shown by the MACD here or by the EMAs. The stochastic doesn't really give us much of a signal right now. So for now, the idea is still for the market to move lower. So the near-term downtrend would only come to an end if we actually push back into the descending channel, or at least then we would start seeing a deeper correction. And at that point, I would also be willing to draw in some FIB retracements, which I'm a little bit hesitant to do right now. And we can see here that trying to retrace this down leg higher, we see that it is this flat. It is also the channel resistance, and it is the 23.6% FIB retracement. So all of them are coming together at the 66, 8, 9, 67, that sort of area. So if we were to push higher, then we could actually see a deeper correction higher, usually into the 61.8%. And to see what's most likely to happen, we will have a look at the intraday chart. So on Friday, we identified this falling wedge here, which means, which usually resolves to the upside, and it indeed did. And once this was resolved, we get an upside target near 67. And the 67 also coincides with this peak, and it's also the 23.6% FIB and also the channel border. So there's a lot coming here together. So I do not believe for now that the bulls would be able to push above it. But we are not even there yet. For now, we still have to break past this tiny range here, 6246, 6411, for us to even get this extended up leg. Other than that, probably this morning a little bit lower, as shown by the stochastic. Moving averages shouldn't be used, and tools based on moving averages like the MACD shouldn't be used. I would rather look at the stochastic now. So definitely down here, and then we'll see what happens. We get a good bounce or we break lower. And this would also mean for the daily chart that we either get this deeper corrective move higher, or we continue immediately lower. And that is all for EUAs. We are now having a look at the Henry Hub, and that was quite dramatic what we saw over the past week. So on the weekly chart, we see that all the gains from the past 2-3 weeks were now completely undone. And that also turns the midterm outlook from bullish to bearish. So this was quite a faux pas on our side because we turned neutral here from bearish to neutral, and then we turned bullish with this candle, all for it to be just undone again. Back here, the outlook still made sense with the evidence available to us, but this could no longer be justified. We are now also forming for the first time lower highs and also lower lows. So a push below 2.235 would confirm midterm downside continuation. And what that means is that we are also looking for selling opportunities on the daily chart. And of course, ideally, we can sell into an already falling leg, yes, of course, but even better, selling opportunities come as soon as we have something like an upside continuation before it goes lower. So here on the daily chart, we see that tools are firmly bearish. We might have a runaway trend on our bear market on our hands. And we could very easily push below 2.414. That is the idea for now, at least. So we see that tools are confidently bearish, MACD. We got a bearish moving average crossover as well. And stochastic and oversold territory is normal because we are making new lows. On the intraday chart, we see the following. So often what happens is after some dramatic losses, we see a little bit of moderation. And from this down leg, I drew on the Fibonacci retracement levels. So between 2.514 and the 23.6% Fib at 2.551, we are neutral. So a move above 2.551 would lead to a more substantial corrective move. And usually these go into the 50 to 61.8% Fib. But ultimately, the idea is still for the market to move lower eventually. Alternatively, we could simply move below 2.514 immediately, which would then continue the near-term downtrend as well. So on the daily chart, it would look something like this. So if we open a little bit higher, perfectly fine, maybe 1-2 candles, maybe some hesitation before we continue lower. This is perfectly acceptable. And that is it for Henry Hub.